Good afternoon, everyone. We welcome you all to the webinar on the Prevention of Money Laundering Act, organized by the Banking, Financial Services and Insurance Board of the Institute of Cost Accountants of India today. And we are really honored and privileged to have as our eminent speaker today, Sri Bala Subramanian K. Sir. He is the Joint Secretary, Department of Revenue, Ministry of Finance. We welcome you, sir. We also have with us Semi Chittaranjan Chattopadhyay sir. He is the chairman of the BFSI board of the Institute of Cost Accountants of India, and Semi Dipendu Roy sir is the additional director, HOD, and secretary of the BFSI board of the Institute. We heartily welcome all of you. So just before we start, we are playing the Institute anthem first, and then we will continue with the session.
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतङ्गमय
मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय ॐ शान्ति शान्ति शान्ति।
So, our chairman sir will join shortly. So just before that, I will like to introduce our speaker, Sri Bala Subramanian K. Sir. Sir, he is a Joint Secretary to Government of India in Department of Revenue, Ministry of Finance. Currently, he is leading the Tax Policy Research Unit, a lateral entrant into Central Secretariat Service of Government of India, and a seasoned tax professional with over 22 years of experience in his current role. Sir is responsible for carrying out duties on various topics of fiscal and tax policies referred to by Department of Revenue, CBDT, and CBIC, and provide independent analysis and policy inputs on such topics, preparing and disseminating within DOR policy papers and background papers on various tax policy issues. In addition to the tax policy analysis and research responsibility, he is responsible for Project Management Office for India's FATF mutual evaluation process. Prior to joining the government in January 2022, he was the global head of tax of a large Indian multinational conglomerate which had business presence in over 65 countries. He has diverse experience in direct and indirect taxes. He has worked in the US for 6 years and has deep insights on international tax issues, having managed tax compliance and litigation in over 65 countries. He was also earlier the chairman of Direct Taxation Committee of Bangalore Chapter of Commerce and Industry, a member of the Taxation Committee of Confederation of Indian Industry, a member of the core team of NASCOM for taxation issues including GST and emerging global tax developments. He has led many delegations to government and ministry on various industry issues and has advocated on key policy changes in the country. We welcome you, sir. We are really honored and privileged to have with you, sir. So now requesting Bala Subramanian, sir, for his address. Sir, please.
Hi, good afternoon. Am I audible, Mr. Roy and Mr. Bhattacharya?
Yes,
Yes,
yes.
yes, audible, sir, audible.
Okay, wonderful, wonderful. Thank you for the kind introduction, and thanks for the opportunity to address the professionals of the cost and management accountants of India. Um, this is a very seminal topic in terms of uh, the recent development which has taken place in the context of the PMLA, the Prevention of Money Laundering Act, within which the professionals of which you are all part of has been included as one of the reporting entities, as early as the notification dated May 2023. So there is a notification which the Department of Revenue had brought out on May 3rd, 23, by which the cost accountants who are performing certain activities, which we will go through in greater detail, once we get into the presentation. But there are certain activities which are listed, and if the cost accountants and other professionals are also there, but if the cost accountants are performing those activities and financial transaction in respect of those activities especially, then you are regarded as a reporting entity for the purpose of Prevention of Money Laundering Act. Now, what are the obligations of a reporting entity? We will go through, but at a very high level, all that it requires is to maintain a client due diligence records, perform those client due diligence, retain those records for a period of time that is mentioned in the PMLA, and also assess your firm's risk with respect to the money laundering and terrorist financing activities, right? And why this is relevant, I'll just give you a backdrop, because most of you must be wondering why suddenly a notification was brought out, and why the professional should be considered and why not others. So, I'll just give you a background, and then, probably we'll get into the technicalities. Now, as you all know, you might have read it from the newspapers and from, the press, and probably the institute would also have briefed you in the past. India is going through a mutual evaluation from the perspective of its compliance with respect to the recommendations given by a body called as Financial Action Task Force, FATF, FATF as it is called. FATF is a intergovernmental body consisting of about 40 members. In fact, it is, it reached 40, in October. It was 39 prior to that. 40 countries are members of this group called FATF. Now, FATF was set up sometime in 2000s, and what it does is it does set standards for the purpose of combating money laundering and terrorist financing in the country, right? And any country which is a member of this group, FATF, will have to comply with those standards. And there are about 40 recommendations which have been undertaken by this body, and we will have to comply with each of these 40 recommendations. And when I say 40 recommendations, each recommendation will also have multiple sub recommendations, right? So a member country will have to comply with these recommendations, and at a periodical time, at intervals of time, the countries will go and will undergo an evaluation by other member countries, right? And this process is called the mutual evaluation, because I go and evaluate another country may come and evaluate India, right? So therefore it is called mutual evaluation, and it's like your peer review, which happens in all the institutes as well. So when they come for these mutual evaluation process, they first check the technical compliance with respect to these recommendations, whether we have implemented these recommendations, then whether the implementation that we have done is effective in terms of combating money laundering and terrorist financing in the country. So there are two levels of checks. In fact, most of the professionals would be well aware of this concept of test of design and a test of detail, right? Test of design is your structure, the process that you look at it, and whether the process is working fine is looked at from the perspective of test of detail. So both these processes are, in a manner called as technical compliance as far as laws, regulations are concerned, whether they are meeting those 40 recommendations. Then the next step is to check whether the outcomes, as they call it as immediate outcomes in the world of FATF, there are about 11 immediate outcomes. Now, whether 11 immediate outcomes have been met or not would be the question which will be answered in the effectiveness process. So there are two processes, as I said. One is the compliance, another is the effectiveness part. Now, when we looked at these recommendations, last year, we found that one of the recommendation, in fact, couple of recommendations, recommendation 22 and 23. So I invite all of you to go through these recommendations and the related interpretative notes and the methodologies which have been published by FATF. These are available in public domain in the FATF website. So two recommendations, recommendation 22 and 23 are those recommendations which deal with the professionals, which deal with the cost accountants in specific, right? So when we looked at these recommendations, we were not complying, with these recommendations, and therefore we had to bring these cost accountants and other professionals within the ambit of PMLA as the reporting entity. Now, what does these recommendations talk about? These recommendations talk about situations where the professionals would undertake 5 transactions for on behalf of a client. These 5 transactions are buying and selling of real estate, managing of client money, securities or other assets, management of bank, savings or securities accounts, organization of contributions for the creation, operation or management of companies, creating, operating or management of legal persons or arrangements, and buying and selling of business entities. Now, if any of the professionals undertake any of these 5 activities, on behalf of a client, then as per recommendation 22, they are required to perform client due diligence. They are required to retain those records of client due diligence for X number of years. Under the PMLA, it is 5 years. They are supposed to go through, the transactions from the perspective of whether, they are politically exposed persons or not. And they are required to maintain all of these records even after the client relationship has ended. This is the requirement as far as the recommendation 22 is concerned. Now, recommendation 23 goes little bit, further step. It says if the professionals undertake financial transactions on behalf of the client in respect of these 5 transactions. So first threshold is just executing those transactions, whether the words used in the recommendation is prepare for or carry out transactions. So if you prepare for or carry out transactions, there is one set of obligations cast on you under recommendation 22. But if you undertake financial transactions in respect of those transactions which are listed, which I read out to you, then you are supposed to also put in place a requirement where if there is a suspicion about the financial transaction, you should have a mechanism to report to an agency called as the Financial Intelligence Unit of India, right? So what does suspicious transaction mean? We will go through that in little more detail when we go through the presentation. But all that recommendation 23 says is if you do financial transactions on behalf of a client in respect of those listed activities, then you should have a mechanism to identify and report suspicious transactions to FIU. Now, in addition to that, you should also, so when can you have a mechanism to identify and report suspicious transactions? Only if you have an internal control mechanism, only if you identify your transactions or customers in certain high risk countries, etc., etc. Right? So, as I said, there are two levels of recommendations. One is a lower threshold where only doing the transaction, that is preparing for or carrying out the transaction, requires X list of obligations, which are cast on you. If you do financial transactions, so we'll come to whether you can do financial transactions or not as per the institute's guidelines. But if you do financial transactions, then the responsibility to identify and report suspicious transactions would be cast on you. So this is the recommendation in gist. So when we looked at these recommendations, we found that the professionals in the country were not covered for this, were not enabled for this. So therefore, to come within the technical compliance of the FATF recommendations, we brought out this notification called the May 3rd notification. There is also one more notification, which is May 9th notification, which deals with different set of transactions. As I understand that none of the professionals are directly engaged in those transactions. So for the purpose of this discussion, we will skip the May 9th notification. But I would request you to go through the May 9th notification also and intimate the institute in terms of your coverage, etc. Now, we will get into further details, and I'll also come in, what are the expectations that the government, Department of Revenue has with respect to the professionals. We have had, very engaging discussion with the institutes, all the three institutes. Cost accountants has played a very, very important role in these discussions. It has worked very, very closely, very, very, I would say, in a very professional manner with the government all through this process in terms of bringing the notification, in terms of giving their inputs into the draft notification. Then there was a guideline issued by FIU India. So you must go through that also. So first is go through the recommendations of FATF in the FATF website and the immediate outcomes from the FATF website. Number two, in June 2023, FIU India brought out guidelines for the professionals as to how the compliance with respect to these notifications should be met by the professionals. So even in framing those guidelines, the institute played a very major role. Then what we had was the government India submitted its response to the FATF Secretariat in terms of the technical compliance and the effectiveness to the Secretariat. Now, there are 12 assessors who were nominated by FATF from different countries. They came to India last month, the month of November, between November 4th and November 24th, they were here in India. They went through a lot of interviews and discussions with the agencies, and the institute participated in those discussions as well. They contributed immensely in terms of enhancing the professional standing before the international body, and we could demonstrate our technical compliance and effectiveness before the assessment team. Now the report of the assessment team is awaited. It will come sometime, in the month of April, May, and it will be adopted finally in June 2024. But what I wanted to do is take this opportunity to thank the entire office bearers of the institute, the council, and some of the professionals who were associated with us during this process in terms of building our response and also defending before the assessment team physically when they were here. So I would like to take this opportunity to thank them in terms of the support, and also exhort each one of you and exhort the institute to look at this requirement of notification, May 3rd notification, very closely. Now, probably the mutual evaluation is behind us. Now let us look forward and carry out those compliances which are required from a legal perspective, and understand them and execute it in a manner that is important for the financial system of the country, right? One is the mutual evaluation. The other is you all play a very important role of a gatekeeper, of a conscience keeper of the profession. So from that perspective, while there is a technical requirement under the FATF recommendations, I would say that it is more required from the perspective of maintaining the sanity of the financial system of the country from being exposed to money laundering and terrorist financing risk. So you all play a very important role. So from that perspective, you must understand what are the requirements of this notification, what you must be doing on a day-to-day basis in terms of having the internal control mechanism, in terms of having the client due diligence system in place, in terms of having the record keeping, in terms of making yourself ready in case a suspicious transaction comes up. How do you go about reporting it? Then there is a last aspect that I would like to touch upon, is with respect to targeted financial sanctions. This has nothing to do with the notification dated 3rd May, but this is a requirement under a law called UAPA, Unlawful Activities Prevention Act. So you must, in addition to PMLA, you must also go through UAPA, Unlawful Activities Prevention Act. Now, under this act, and this is applicable to every citizen of the country. It is not just to the professionals. It is applicable to you and me in our day-to-day life if we are in business or profession. Now, there is a list of designated persons and agencies or entities which are published by Ministry of External Affairs and Ministry of Home Affairs as designated individuals and designated entities. Now, what are these designated entities? These are designated entities for terrorist financing activities and proliferation financing activities. Proliferation is weapons of mass destruction. Now, these listings are available in the FIU website. These are also, I'm given to understand, hosted in the website of the institute, right? If the institute has not hosted it, I would request them to host these list. Now this contains the list of those terrorists and terrorist agencies and agencies which are involved in proliferation financing. These are designated by the United Nations. These are designated by the Indian government as well. Now the simple requirement is we are not supposed to deal with these individuals and agencies. Now, in case we are dealing with these entities and we have funds of those entities with us, the requirement is that we should immediately inform the nodal officer. The nodal officer for terrorist financing is a Ministry of Home Affairs. The nodal officer for PFS, which is proliferation financing, is FIU, Director FIU. So we have to intimate the nodal officer of the government, freeze the assets immediately, and inform the nodal officers, and freeze the assets and inform the nodal officer. Now this responsibility is cast on all of us, right? And in 99.99% of the cases, this would not come at all, because the names in those lists would be like Dawood Ibrahim, right? Masood Asad kind of names, right? So none of us would be engaging with those individuals. But the requirement is that we have to be conscious of the list, and that list should be embedded into our day-to-day, operations, so that we don't deal with those individuals and agencies at any point in time. Now, this is more applicable for banks and certain financial institutions, but an equal responsibility is cast on the professionals also. So some of the smaller professionals, it may not be applicable, but
নামটা ডেজিগনেশন লিখে দাও না, নাম আর ডেজিগনেশন, আমি তো রেসে গেছি।
Sir,
be
Chairman,
conscious.
sir, please mute, sir. Sir, please.
So please be aware of this list. Please be aware of the list which is hosted on the websites of FIU and institute, and be conscious of the requirements that are there from a TFS point of view. TFS is targeted financial sanctions, right? You would have heard this, in the newspapers, that US has slapped a sanction on this particular individual. UN has slapped sanction on these particular individuals. God forbid these individuals come to you and seek professional advice. You must be conscious that you don't engage, with those individuals and agencies or their beneficial owners, right, in any form. So from that perspective, you must be aware of the requirements that are there from a TFS point of view, targeted financial sanctions, with respect to TF, which is terrorist financing, and with respect to proliferation financing, right? So these are two aspects that as citizens of India, we should be aware of. Most of us are not aware of. So therefore, I thought I'll take this opportunity to highlight this to you. This is also a part of FATF requirement, but that is only an incidental part. As a citizen, we must be aware of these requirements in any case, and therefore, I thought I'll take this opportunity to highlight it. Now I would request my colleague, Mr. Avinash Rana, to go through the technical presentation in terms of whatever I've listed, whatever I had talked about now. He will explain it in a little more detail, and I'll come in as and when I need to clarify, or I need to make a special mention about what the expectation is of the professionals. Then we will have one question and answer session at the end of his presentation as well. So can we move forward, Mr. Roy?
Uh,
Something else to come in now.
Yeah. Thank you so much, sir. Just before handing over to Avinash Rana, sir, since our chairman, sir, has joined, Semi Chittaranjan Chattopadhyay, sir, so requesting our chairman, sir, for his address. Sir, please.
Sir,
Wonderful.
namaskar.
Thank you.
Sir, namaskar. Yeah, it's a great occasion for us that you have, within your very busy schedule, you are with us. Sir, I beg to be pardoned because I'm in a BIS, some program is going on. I came here, I could not connect, but in time. For that, I beg to be apologized. But your presence has made us really very much proud, because this particular PMLA we are continuously doing from BFSI board. We have already made 3-4 programs where we have got a workshop also. But today's sessions, whatever you have told, it has gone to the many members, and we'll be circulating it to the all members in India and abroad. So it will be having a huge visibility. In fact, in Prevention of Money Laundering Act, it's a great, subject for our profession. So far as as you have told, the targeted financial, this other things, whatever you have mentioned here. But at least at the end of the day, I can assure you that from the institute, we are continuously preaching this, and we are continuously educating our members. And I'm sure, sir, your presence today, it will definitely, it will be furthering it. It will reach very, with a responsive behavior, responsiveness, so that all the ultimately members can understand that this act, which has been an order that has to be complied with, and that has to be followed up in totality for their professional life. And I'm sure, sir, in near future, we shall be holding such programs in our chapters. We have got our 112 chapters. We have got our professional councils. And sir, you'll be very happy to know that most of our members who are located in various other places, we are doing these sort of workshops. But today's sessions, we shall be recirculating to all our members, those who could not join here, and we'll be definitely, sir, looking for your advice. And I personally want to meet you to give you some sort of a feeler that how our members are really, they are following this path. And in near future, I am sure I will be inviting you in Kolkata itself, because our headquarters is at Kolkata. I want to invite you so that we can have a physical, program with your auspicious presence, sir. Thank you for your, presence, and we'll be listening from you coming, and I welcome Mr. Avinash also for his presentations, and we shall be all listening from him also. Thank you, sir.
Thank you, sir.
Thank you, Chaitanya sir. Thank you, Bala sir. So let me just show the screen. Please let me know if the screen is visible.
Yes, sir. It's visible now.
Mr. Roy, is the screen visible?
Yes, sir. It's visible, sir.
Visible.
It's visible.
Yeah, go ahead.
So hello everyone, I'm Avinash Rana and I'll be taking you all through the topics. Yeah, as you can see on the screen. So first is what is money laundering and sanctions. Second would be understanding what PMLA regulatory obligations are. And third would be to understand the key components of AML and sanctions compliance program. The first is we'll understand what is money laundering. So money laundering is generating money through illegal means and disguising its source to use the funds to do illegal activity or legal activities. So second we have is terrorist financing. There is a slight difference between money laundering and terrorist financing. In terrorist financing, this money could be generated from legal means also, and to be used to support terrorist acts or for those organizations who support terrorist activities. On the right, we can see the criminal activities or the predicate offenses that lead to money laundering.
So, just to elaborate on this, so what is money laundering? I think most of you must be aware, but it is, ill-gotten money which is integrated into the financial system, and it is converting illegal money into legal money, and integration with the financial system is the requirement of money laundering. Whereas terrorist financing, like what Avinash mentioned, it could come from legal means. It could come from my taxed money, right? I'm earning a salary, it is taxed, but I can contribute to a terrorist organization to perform terrorist activities. Or I have illegal money and I contribute to terrorist acts or activities. Both are terrorist financing. That is the essential difference between money laundering and terrorist financing, because money laundering is illegal money converted to legal money. Terrorist financing could be both legal or illegal money, but end use is terrorist activities, to fund the terrorist activities. Go ahead.
Now we'll talk about those different stages of money laundering. So first is placement, second is layering, and third is integration. So in placement stage, a perpetrator tries to place the money into the financial system of the country. And then in the layering stage, the perpetrator tries to make the transaction more complex, so to disguise the original source of the income. And in the integration stage, that funds are used again into the financial system, but as a legal, which looks like as if it is the legal money. Now I'll talk about what are sanctions. So sanctions are imposed by any country onto another country, or it could be on an entity, or it could be on an individual. So Sanctions are financial and trade related penalties imposed by one country or another country or company or individuals. Sanctions programs, like we all can see here, a sanction program may ban all transactions within a given country or restrict only certain activities. It may restrict transactions with specific individuals, or it requires pre-approved licenses before the transaction. And it may involve blocking or rejecting the transactions. So there are certain types of sanctions which a country may impose. Now we will go through the regulatory overview of AML and CFT along with sanctions. Now, this is the broad level regulatory overview where we can see Indian and international bodies which are working towards AML, CFT, and sanctions compliance. On the left, you can see PMLA, which is the prime act to fight against the money laundering, terrorist financing, and sanctions. And second, we have FIU, which is the central agency for receiving, processing, analyzing, and disseminating the information to enforcement agencies in the country and to foreign FIUs as well. Then we have RBI, which is the central bank and the regulatory body for the Indian banking system. The last one in the Indian context, we have a UAPA, as Bala sir also mentioned earlier, is the act which deals with the terrorism related issues. On the right side, we have global organizations. First is Financial Action Task Force, which Bala sir also explained earlier. So this is a global watchdog for AML CFT sanctions compliance. Second is Polster Group, which is a non-governmental association of 13 global banks. Then we have BIS, which is a Basel Committee for Banking Supervision, which was established by G10 countries of the central banks. Next is Egmont Group, which is a group of all the FIUs which are there in all the countries. The last one is UNODC, which is a UN body for drug control and crime prevention.
You can skip some of these, Avinash. I think PMLA they must be aware. So you can skip, but I think let us cover the reporting entities. So let me quickly cover this. Right. So as I said, PMLA, there are two parts to it, right? There is one part which deals with investigations and bringing the perpetrators of money laundering to task, right? The other part is with respect to the reporting entities, because money laundering investigations can be conducted by enforcement directorate. uh, it has limited resources, so therefore certain activities it can do, but there is also a mandate of prevention of money laundering. So one is investigation and bringing the perpetrators to book, but the mandate under the law, the legislative, as it can be understood from the name of the act itself, it is prevention of money laundering. So therefore there must be a mechanism in the country where there should be an intelligence mechanism to track those individuals and transactions which contribute to the money laundering and prevent them from happening, right? So put regulatory things in place, make things difficult for those perpetrators to convert illegal money to legal money, right? So from that perspective, the framework of reporting entities, the framework of financial intelligence unit is very, very important, right? Now, what are these reporting entities? So as we said, layering and integration happens with the financial system, because the financial system is the one which is accounted system, right, where the tax paid money is accounted. Now, therefore, any person who is involved with the financial system automatically becomes the reporting entity. So the banks, stockbrokers, insurance companies, NBFCs, the payment system operators, your money changers, all of these guys are natural component of financial system. They become reporting entities. Now, there is a category of DNFPB, designated non-financial business and profession, which has been introduced by FATF. Now, what are these DNFPBs? Now, these DNFPBs are generally those people who handle high risk money laundering sectors, or those who are gatekeepers of the financial transactions, right? The first category is where they are involved in high risk sectors. Those high risk sectors are three as far as FATF and India is concerned: casinos, dealers in precious metals and stones, and real estates, right? So these three are understandably those sectors where it is it is highly prone or highly vulnerable to money laundering in the country. So these are reporting entities from that perspective. Then comes the gatekeepers. Now, who are these gatekeepers? Gatekeepers are professionals like you, accountants like you, who deal with clients and who are engaged with clients in some of these transactions, right? And naturally become a gatekeeper. Then the next category is called the TCSPs. This is the May 9th notification that I was referring to. Trust and company service providers. Now, if you look at offshore countries like Mauritius or Cyprus, there is this concept of, trust company service providers. Now, what they do, they allow their officers to be used as address, and accommodation providing officers, right? Now, thousands of companies would be incorporated with a single address. Now, that is something which is not good, because these are shell companies. These are companies which no substance in the country. So they are highly prone for being misused for these illicit activities. So from that perspective, TCSPs have been brought in as one category of DNFPB. Then the last one, which very recently they have added, is this virtual asset service providers, VASPs, or the cryptocurrency as we call it, right, in colloquial language. So that is also part of the reporting entities. So in India, we have all of these entities as reporting entities. Now, what is this reporting entity all about? What are the obligations cast on them? We will look at it in further detail. Go ahead, Avinash. Go to the next one. Yeah, so this I have explained to you. Financial Action Task Force, on the right, there is a table which summarizes 40 recommendations, right? Now, the recommendation which is relevant for us is in Group 4, Financial and Non-Financial Institutions Preventative Measures, which is recommendation 9 to 23. But what is relevant for the professionals, the DNFPBs, is recommendation 22 and 23. For the institute, what is relevant is Group 6, where the powers and responsibilities of the regulator would come. The institute automatically becomes a regulator of the profession, because they provide the license, they provide the membership services to the professionals in the country. So they have the power of supervision and they have certain responsibilities which we have engaged with them, and that is noted in recommendation 28 as far as the powers of the regulators of DNFPB is concerned, which comes in Group 6. So there are about 40 recommendations. These are very, sound recommendations, which have been introduced after a lot of deliberation. Lot of countries, give their views. So these become international standards, in their own right. And I would request all of you to go through these 40 recommendations, in particular recommendation 22 and 23 and 28, to know what powers your regulator, which the Institute of Cost Accountants have. You must read recommendation 28. Go to the next slide. Now, what does FATF do? Right? Now, I didn't cover this in my opening remarks. Now, there are 40 recommendations. There are 11 immediate outcomes. Now, they will come and look at whether you have complied with these 40 and 11, standards, as they call it. And they will rate you. They will rate you as whether you have met, not met, mostly met, partly met, substantially compliant, largely compliant, low level of effectiveness, etc., etc. Now, based on these ratings, and there is some kind of risk, weightage given to certain recommendations, etc., they will come to a conclusion whether the country is either in the blacklist. I'm just going from bottom to top, whether in the blacklist, or whether they are in the gray list, or whether they are in follow up. Follow up has two mechanisms: enhanced follow up and regular follow up. Right? Now, what we have given here is, after doing the mutual evaluation of these countries, FATF has blacklisted 3 countries: Myanmar, Iran, and DPRK, North Korea, and grey listed a dozen countries, right? Albania to Cayman Island, to Mali, to Philippines, to South Africa, to Turkey, to Yemen, right? So these countries are grey listed. Now, what is the effect of blacklisting or grey listing? Now, blacklisting, you cannot have any transactions with these countries, right? Unless and until it is excluded from the sanctions, right? So you cannot have any transactions with these blacklisted countries, but for the humanitarian causes. With grey listed countries, you can have transactions, but you have to be careful whether these transactions that you are executing with the individuals or with the companies of these grey listed countries. You have to have enhanced due diligence. You need to get into further details whether these constitute money laundering or terrorist financing in essence, right? So if it is, then you shall not get into those transactions and report immediately to FIU. So the effect of grey listing is the monitoring of transaction goes through a higher threshold. So therefore it inconveniences smooth conduct of business and trade. So therefore the effect of that would be seen in the foreign direct investments coming into the country, or the enablement that the Indian citizens would get to go out and invest in some of these countries, right? So you will not have a free move or a free check to get investments from these countries or to make investments in these countries. So grey listing would have a crippling effect on the financial system, and therefore countries dread grey listing, right? And that is what we are trying to avoid in this process, so that we are not grey listed. We would certainly not be blacklisted, because our regulation mechanism is one of the best in the world. But countries like South Africa, countries very recently, certain like Dubai, UAE has also been put in grey listing, right? So these are countries not they are not small countries. They have a good regulatory mechanism, but still they couldn't meet the technical compliance requirements. So from that perspective, it is very, very important for us to not get into this grey listing, and therefore we have made this endeavor of all the changes that we have done, and we have put our best foot forward in this mutual evaluation. And that is where we are all in this particular room talking to all of you about the importance of FATF mutual evaluation and the importance of compliance with respect to PMLA and UAPA. So this categorization of black, gray, enhanced follow-up and regular follow-up, you should keep in mind because it will come to impact you if India gets into one of these buckets. Yeah. So as I said, we brought this May 3rd, 2023 notification by which the cost accountants along with the other professionals were brought in as DNFPBs or reporting entities under PMLA, right? Now, what are the key requirements of this AML CFT provisions? We will go through that in a little more detail. Go. Regulators role we need not cover here. Yeah. Yes. So, there are three, things that you must keep in mind, right? Now, if you are a reporting entity, but you, right, these are very, very simple impacts that, you are aware of because each of this is applicable to any non-compliance. So you have a reputational damage because FIU will go after you in terms of levying penalties for not maintaining the client due diligence, etc. So it will result in loss of revenue. The regulator, which is the institute, will also initiate disciplinary action against you for not meeting the CDD requirements. So there will be legal and regulatory, actions. There could be operational challenges, right? Because you will not, function as usual, right? It will not be business as usual because you will have to answer the institute, you will have to answer multiple law enforcement agencies. So therefore, compliance is very, very important, and these are the risks and consequences. I don't need to elaborate this. This is the consequences of any non-compliance, and more so with respect to a onerous law like PMLA and UAPA. Next. Yeah.
I will talk about the key components of AML and sanctions compliance program. As you can see on the screen, these are the 4 pillars of AML CFT compliance program. First is customer due diligence, as we call it CDD, or enhanced due diligence, which is called EDD. The second is monitoring of transactions. Third is regulatory reporting, and fourth is record keeping. So in customer due diligence, first we take the KYC documentation of our clients. The second part is name screening of all the individuals who are a part of our client. If in case of an entity who are all involved in that entity as a director or any key management personnel, we need to screen their names against the sanctions list or any blacklist or any other list provided by the law enforcement agencies of a country. Now, next would be risk.
In this context, Avinash, one second. In this context, so KYC is know your customer, right? Now, what are the documents that you should be taking to identify your customers, right? What risk assessment that you do? What are the record retention requirements under the Indian law is delineated in Rule 9. Please note down Rule 9 of Prevention of Money Laundering, Maintenance of Record Rules 2005, right? Maintenance of record rules. Now, this has nothing to do with enforcement directorate, etc. So this is a separate process where it is internal to you. You need to know who your customer is. You need to identify them with the documentation which is mentioned in the rules. Rule 9, if you go through, there are subsections which will sub rules which will tell you for an individual what documents you should take, for a partnership what documents you should take, for a HUF what documents you should take, for a company what documents you should take, to identify beneficial owner what you should do, sub rule 3 of rule 9, right? So these rules give you a very clear view in terms of what are the documents acceptable from a PML rules point of view to identify your customer. Then the PML rules also requires you to maintain these records for 5 years, from the day of transaction and also from the day you end the client relationship. It also requires you to do a risk assessment. Now, what is risk assessment? I'll come to it in a minute. Then you should also do name screening. Name screening is with respect to TFS, the designated list and the sanctions list that I talked about. We'll go through that in detail. But at the time of doing the CDD itself, you should do the name screening. Now, coming to risk assessment. Now, risk assessment is something that large firms do it in terms of identifying what are your high, medium, and low risk in facing your business. It may not be very applicable to cost accountants in specific, but generally I will just cover the concept of risk assessment because you should know if you are a large firm, then it is important that you have a risk assessment policy in place. Now, what does this mean?
Interview, you can directly get admission.
If you can keep your phone on mute, it'd be helpful. Thank you. So, by risk assessment, what we are saying is you must know, what are those areas which are high, medium, and low risk as far as the professionals are concerned. Now, to assist you in this, the country has done a national risk assessment, the summary of which has been made available to the institute. The institute has also done a lot of awareness program and outreach programs on national risk assessment. If not done, I would request the BFSI committee to do one dedicated session on national risk assessment. Now, what does national risk assessment mean? The country has assessed various money laundering and terrorist financing risks that India is exposed to from a risk, threat, and vulnerabilities perspective. And we have categorized certain sectors as high, certain sectors as medium, certain sectors as low. So if as a professional you are dealing with X customer who is in a high risk sector, for instance, real estate is medium high as far as NRA is concerned. So if you get a customer who is in real estate, it is automatically medium high for you. If you get a customer who is into gems and jewelry, it is automatically high, medium high risk for you because the NRA says so, right? If you deal with a customer from United Arab Emirates, he is in gray listing, right? Gray listed country. So he's automatically high risk for you. So therefore, you should have a policy which would categorize your customers into high, medium, and low. And what does it do, right? Now, in a high risk, when dealing with a high risk customer, you are supposed to do enhanced due diligence as far as the PML rules are concerned. With medium and low, you can do simplified due diligence. By simplified due diligence, you can take those documentation which is mandated under PML rules and you're done with it. But if you have to do enhanced due diligence, what you need to do, you must go beyond the identity of that particular person. You must go and inquire where his financial sources are from. Does he have the financial strength to do those transactions for which he has come to you for professional advice? Where does the funds come from? Where is the source of the fund, source of the wealth? So you as professional are supposed to do certain inquiries, perform enhanced due diligence so that you can be sure that the financial transaction that you are privy to, you may not execute it through you, but you may be privy to that transaction, that it is not in the nature of money laundering or terrorist financing. Now, in the context of this, I would like to give you an example, right? You may all have accounts with banks, right? Now, banks these days are very, very stringent about KYC, right? they are also asking you to do re-KYC every 2 years, every 1 year, every 3 years. Different banks have different cycles of doing re-KYC. So that is essentially coming from the requirement of PML rules, right? We have made those rules and we have asked the banks to do a risk assessment so that they will know which customer I must ask KYC document when. So for me, I am a politically exposed person. I am in the government. They are supposed to do KYC every year. They must come and ask me, what is my source of income? What is my source of wealth? Where am I getting the money for which I am doing a particular transaction? So if I am dealing with a stock, right, I'm buying and selling stocks, my stockbroker is supposed to do enhanced due diligence on me because I am a high risk customer. I am a politically exposed person, right? But if I am a private private employee with known sources of income and wealth, which is well documented on the tax returns, then I am a low risk customer as far as the banks are concerned. So they will do KYC once in 4 years, once in 5 years, once in 3 years. So as per their internal risk assessment, they would delineate the period within which KYC has to be done. From the professional point of view, because you may not have regular transactions, right? Because you are only doing advisory function on a particular transaction. Therefore, you must perform these due diligence at the time of onboarding the client. So when you are onboarding the client, you must take documentation which supports the identity, which supports identity as per the documents delineated in the PML rules. Now perform the name screening. There are various softwares which are available. I'm not saying that the professional should do that, but go through those lists, the designated list once, and also go through that frequently because it gets updated every now and then, right? Do the name screening and ensure that the customer is not in the designated list. If he is not, and as per your risk assessment, he is not in any of the high risk sectors, then it is very clear you don't have to bother at all. But if he's getting into any of these red flag indicators, then you must do an enhanced due diligence. You must ask little more intelligent questions as to what is he trying to do? What is a financial transaction all about? Where is the money coming from? Where is the source? Where is, if he has an ancestral house, is it an ancestral house or did he get it through ill-gotten wealth, right? All of those questions, as professional, you are expected to ask because you are a gatekeeper, you are a reporting entity as far as PML rules are concerned. Now, transaction monitoring may not be very, very applicable to you because you don't have continuous transaction with the client. So we can skip that. But what does transactional monitoring means? Banks and financial institutions are supposed to monitor all the transactions every day. So for some of you may be exposed to this. As soon as you transfer, say, 10 lakhs to a particular individual, right, with whom you have never transacted, automatically these days a call comes from the call center. They will ask you whether this transaction was executed by you, right? So this is a fraud monitoring, this is transaction monitoring, and these kind of red flag indicators are put in the system. One is passive checking, other is an active checking. So they will go out and check with the customer whether he executed these transactions. Then if 10 lakhs money he is getting for which his financial standing does not justify, they will ask you, where did you get this money from? What is the source? Did you get it as salary? Did you get it as sale of any asset? So they'll ask you for the source. These are essentially these questions. If you get from your banks, you must immediately know that this is this is coming from the requirements under PML rules. It is not that the bank is intruding into your privacy and asking something which they are not supposed to ask. They are asking something because they are a reporting entity, they are a watchdog, they are a gatekeeper, They are a reporting entity under PML rules. They are supposed to report to FIU if they find that you have engaged in any illegal transaction, you are trying to integrate it into the financial system. So that is what is called transaction monitoring. For professionals, it may not be very relevant. Next is the reporting, right? Now, as I said, as soon as that 10 lakhs hits somebody's bank account, bank calls somebody, that person, and finds out where did he get this money from. If they find it suspicious, right, then they are supposed to form a view on that and report to FIU that this particular suspicious transaction was executed through my bank account, and this is what I'm reporting to you. Now, what happens from there? FIU does a 360-degree analysis of the transaction, right? Because it has, views of, these transactions from various sources. So they'll do an operational analysis. If it warrants a reference to a law enforcement agency, FIU will do it. So therefore, as gatekeepers, as reporting entities, your job is to only report suspicious transaction. Your job is not to investigate. You are not an investigator. You are not a law enforcement agency. You are only reporting a suspicion, a mere suspicion to an intelligence agency called FIU. FIU also doesn't conclude. They don't investigate. They just gather intelligence from various sources. They analyze the transaction and gives operational, views to the law enforcement agencies. Then it goes to CBI or ED or NIA, depending upon the, the transaction that it pertains to, or it could go to CBDT, it could go to GST. It'll get investigated by these law enforcement agencies, and the law will take its own course. So as a reporting entity, your minor role is to report a suspicion. From there, the intelligence agencies and the investigation agencies would take it forward and culminate into actionable money laundering investigation and terrorist financing investigations. So this is the role of a reporting entity as far as the AML process is concerned. Customer due diligence, do the screening, do the documentation, retain the documents, ongoing monitoring of the transaction, ongoing monitoring of the relationship. If you find anything suspicious, you should report to FIU. Your role ends there, right? Now go to the sanction process.
Just one more thing to highlight. While reporting the suspicious transaction report to FIU, you cannot inform this information to your client.
Correct.
You can't tip off that information.
It is only a suspicion, right? It is only a suspicion. So therefore, you are not supposed to go and tip off your customer, your client, that you have formed a suspicion and you have reported it to FIU, right? So it doesn't. Get out, Avinash. Yeah.
Next is KYC verification and screening of the new.
This is what I explained to them, that you should go through rule 9 of PML rules in terms of the CDD requirements with respect to specific clients that you have, the beneficial ownership requirements which are there, and the screening requirements, the name screening with respect to the TFS, the targeted financial sanctions. Move to the next slide. So this is the process, the stepwise process in terms of how you do the customer due diligence. So you can go, we'll share these slides, you can go through them in greater detail, but the essence of it, I had explained it already. Yeah. So again, the risk assessment, I had mentioned it very, very briefly. It may not be, greatly applicable to small professionals. But all that you should know is there is a concept of national risk assessment. We'll introduce that national risk assessment to you through the institute, right? From that national risk assessment, you should know where your customers' risks are, where the geographical risks are, like the gray listing countries, like the blacklisting countries, which products and services are high risk for you, right? What are the special risk factors that you should keep in mind? Is there a delivery channel risk? It may not be there as far as the professionals are concerned. So we can ignore delivery channel and special risk factors. But the geography, customer risk, product and services are very, very important. Like incorporation of companies is a highly risky service that the professionals would execute, right? Why? Because the shell companies are formed unknowingly by the professionals, right? They don't know. When somebody comes to you and asks you to incorporate a company, you incorporate that company. Later it can be misused for money laundering and terrorist financing activities, right? So at that point the law enforcement agencies will come to you and ask, did you do the due diligence? Why did you not find out that this guy has these illicit sources of wealth? How did you allow him to incorporate the company, which is a shell company, to pass through the money laundering aspects through that particular shell company? So the incorporation of companies is essentially a service which the professionals are rendering, which would be high risk, because the shell companies have been identified to be a very high risk from the national risk assessment point of view. Likewise, customer risk, real estate companies, gems and jewelries, those are high risk customers as far as national risk assessment are concerned. Geography, UAE, South Africa, those grey listed countries, those blacklisted countries, those are geographical risks that you must know. Yeah. So this is what I had explained, saying what are the different kind of services that the professional can do, right? You can deal in real estate, you can deal with NGOs, right? You can form Section 8 companies for NGOs. Now, NGOs have been targeted for terrorist financing in this country, right? Most terrorist financing comes through NGOs and non-profit organizations. So you must be extra careful in dealing with NGOs. If they are very known, their due diligence is proper, their sources are known, where they are working is known to you, then there is no problem, right? But you must do those enhanced due diligence in terms of knowing what that particular NGO is all about. Where are the funds coming into that NGO, right? Does he have FCRA? If he's receiving foreign contributions, is he executing jobs? Is contributing to activities in areas which are prone to be terrorist activity zone, right? So those you must know in terms of your dealings with NGO. Number two, professionals whose majority of fees come from clients in the notified activities, or you are required. So what a customer can come and tell you, I may not be able to open a bank account, I'll give you cash, you open a bank account in your name, put that money into your name and purchase this real estate for me, right? Immediately it is a high risk for you, right? Why would somebody come and tell you that I'm not able to open a bank account? You open a bank account in your name and you make payments on my behalf from your bank account. So when you start dealing in money of your clients, which I'm told the institute has very, very clearly said, you shall not deal with financial transactions with your client. But if you do, it is a high risk for you. You are doing it at your own risk. Then number four, exposure to client and high medium, medium high clients such as gems and jewelry and real estate, which I mentioned to you. Management of trust and companies, right? Somebody comes to you and say, I cannot be a director in a company. You be a director in this company. You are my nominee director. You hold my shares on my behalf, right? that is something which is high risk. You must not do it as per the Institute's code of ethics. It is also a high risk, indicator as far as PML rules are concerned. If you have bookkeeping services, you must be extra careful that whatever bookkeeping you do, right? The entries which are returned, entries which are entered in the books are backed up by the vouchers and the documents which clearly indicate what the source is and where it is being deployed, right? So therefore you must be extra careful in having bookkeeping services. Providing correspondence address or administrative address. Somebody comes and says, I cannot rent a house, rent an office in my own name because nobody is giving me. You give your office as correspondence address. You must be very, very careful about these transactions. So these 7 aspects are the risks that we have identified from the perspective of the professionals, and with respect to the national risk assessment. Therefore, you must know that these are the risks that as a professional you are exposed to. If there are more, because your line of business could be different, some of them may not be applicable to you, something more may be there, but you must have a line of thought which is aligned with these 7 risks that we have identified. Yeah, covered this, so you can. So as I said, once you have, a low risk customer, a normal CDD, a simplified due diligence is what is recommended under the PML rules. If you have a high risk customer, if you have a medium high risk customer, you must do enhanced due diligence. What is enhanced due diligence? You must ask him certain intelligent questions on source of fund, source of wealth. You must consult your senior partner if there is a senior partner in the firm, senior management, before entering into the relationship. Retain all KYC documents, the screening that you did, the approvals that you took from your firm's management, because these can be called in question by the law enforcement authorities, FIU and the ED. So enhanced due diligence is something which is very essential. You must know when you should do and what you should do. And these are the 3 steps which tell you what you should do in the context of enhanced due diligence. Move forward.
And these are in addition to the basic KYC which we do. This we also covered.
Yeah. So we talked about the monitoring of transaction, the sanction screening, right? So this is what is explaining what are those lists and how you should do the screening part. Move forward. So this I explained very briefly in my initial remarks. There are 5 transactions which are covered. These are notified in the May 3rd notification. I don't need to repeat it. If only you execute these transactions, you are covered by the notification of May 3rd and the May 9th, if at all it is applicable to you. Go for. But in any case, whether you are entering into these transactions or not, I would strongly urge you, because it's a very mature professional system that we have, right? The kind of governance that we have in institutes, the 3 institutes that we have in this country, I have not seen this in any other country, right? So therefore we must continuously enhance our standards of governance. So whether or not we do these transactions as professionals, it is good practice to execute and keep a client due diligence procedure in your firm, in your profession, right? You must know with whom you are dealing. You must know whether he is a high risk or a medium risk or a low risk from a country perspective. Are you dealing with the right person? Are you giving advice and professional services to the right persons and right individuals and right entities in the country. As a professional, I think we must owe it to our profession to bring this standard into our daily professional life and execute this in any case. So we may not do some of these activities, but I would strongly urge you to follow the CDD process as a matter of good practice. Can move forward. Reporting requirements, yes, we have covered. So in nutshell, all that we are saying is please do a risk assessment of your customers. We'll introduce you to the National Risk Assessment through the institute very shortly. We will host the abridged version of the National Risk Assessment in the institute's website if it is not already hosted. But do a risk assessment. Identify your high, medium, low risk customers, right? Execute a CDD process, client due diligence process, whereby you comply with Rule 9 of PML rules, right? Know your customer, very simply, know your customer, know with whom you are dealing with, know for whom you are, giving professional advice and professional services, right? Retain the documents, right? Retain the documents for the period that is mentioned in PML rules. It is currently 5 years. And if at all you do financial transactions, you are required to monitor and report suspicious transactions to FIU India. For the purpose of reporting to FIU India, we have a special arrangement for the institutes. What we have done is we have asked those reporting entities which do financial transactions to report to the institute that they are reporting entities. They would be given access to the self-service portal of the institute, where they can come into that portal and report suspicious transactions. Automatically that would be transmitted to FIU through the API mechanism that we have developed with the institute. So you don't have to come and register with FIU, because we can't register lakhs and lakhs of professionals in FIU. So what we have done is we have asked the regulator, which is the institute, to have a simplified mechanism of reporting suspicious transactions through the institute to FIU India. So FIU India, if they require further clarifications, they'll reach out to you. But for all practical purposes, your job is done if you report it to the institute, right? But this would come only if you are doing financial transactions and you have a suspicion about a financial transaction as having been prone to ML or TF risks. And lastly, the fourth point is on TFS, targeted financial sanctions. These are nothing to do with the notification that we have brought out. This is applicable to all citizens. We are supposed to know the designated list of terrorist and terrorist agencies and agencies which are dealing with weapons of mass destruction. We must know and do the screening of these customers, of our customers with these designated list, and ensure that we are not engaged with these particular designated individuals and entities. And if at all by inadvertently we have done it, or we come to know later, if there are any funds lying with us, we must confiscate the fund and report it to the nodal officer, right? That is a requirement as far as TFS is concerned. So there are only 5 requirements that we have gone through, and that is all it is. So there is nothing to be worried about PMLA that a big unknown element has come into your daily lives, and it has cast an onerous responsibility on you. It is nothing to do with ED at all, right? ED will not come into your doorsteps unless and until you have yourself engaged in criminal activities or money laundering activities. All that is required is to do CDD, maintain record, report suspicious transactions if required, do the screening which is required from a sanction perspective, and comply with the TFS vis-a-vis TF and PF requirements. So these are the simple requirements that your May 3rd and May 9th notification has cast on the professionals, and therefore nothing to be greatly worried about it. Please go through the documents that I had mentioned: FATF website, PML rules, which is maintenance of record rules, rule 9 to be very specific, UAPA and WMD Act. WMD is Weapons of Mass Destruction. UAPA is Unlawful Activities Prevention Act. So please go through these. These are essential. Whether or not you are a reporting entity, for any person who is a professional and who is a citizen of this country, they must know these requirements in general. So I will stop here. We can take questions for 15-20 minutes if it's okay with the council.
Thank you, sir. Before we go for question answer session, sir, I just want to put on record that is such a magnificent presentations. It's a really an eye opener for everybody, because we have organized many programs on this PMLA, but this is the best. My department will also definitely, they will admit, it's a great presentations today. Sir, one just note for you that our institute is continuously upskilling program is there on risk assessment and risk management. Our institute has come out with a paper on risk management in banking and insurance. We have introduced it, and especially from the BFSI board, we are holding many programs and add-on courses like your certificate course on concurrent rate of banks, which deals on the operation risk of the bank, and where we are the anti-money laundering and other things. We are always, this is being covered in the program. Then certificate course on credit management in banks, and certificate course on treasury and international banking. There also we are delving many issues on the FEMA and all these terrorist funding and everything, how it is happens and how the professional you should deal with this. We are doing it, sir. And above all, we are having our webinars and workshops regularly for our young CMS, those who are going to qualify, and they're all going, they're joining this program because this is a compulsory 15 months training program is there. So as you know, we are also doing for them. So in this way, we are actually inculcate the habit of risk management and risk assessment amongst our boys and girls. So at the Institute of Cost Accounting, we have changed our many, our ideas is now at par with the coming days. What is happening? We are going to happen. Sir, we have also the DISA course, Diploma in System and Security, course, which is SATIN has recognized this course, and we are continuously updating our members with this DISA course, and also forensic audit course we have also launched. And many members are now joining, and they are getting them updated, and they're getting knowledge on this particular areas. So by this way, we are upskilling our members. And today's session has become really an eye-opener. We shall be spreading this whole PPT to our members again, and we shall be requesting them. And we'll be definitely bringing out some literature based on your presentations, so that our members, we can reach to the every member's house, that you see this, keep it as your Gita, so that during every day, every process of your journey in professional life, you should remember how PML Act may, this literature will help you to safeguard the interest of your professional life. Sir, I am really thankful to you, and my request to you, please give me some appointment. I want to meet you personally in your office also in this matter. I want to give you some of the books which you have published from the FSI board to you, sir. Thank you.
My pleasure. My pleasure. You can open it up for question and answers.
Yeah. Over to Indakshi.
Thank you so much, sir, for such an informative session. And it's really utmost important, and the serious issues are so deliberated in so detailed manner. So the participants are demanding for the presentation, the PPT presentation, to circulate among them.
We'll share the presentation with you. You can host it on your website, or you can share it with the members. In whatever
Okay, sir.
format you want to do it, please go ahead and
Yes,
do it.
Okay, sir. Okay, sir. So, one question is, what are the precautions
yes,
that
sir.
one can take who is arranging or taking loan through ECB?
Through?
ECB.
I didn't understand the last part. Your voice was breaking.
PCB. Uh,
PCB is what?
Sir, external
ECB.
commercial borrowing.
ECB.
ECB. Okay. Now it's a very, very important question, right? Because ECB is something, which is coming from external sources, right? It is coming from a foreign. It's because it is external commercial borrowing. It comes in foreign currency. But the regulatory framework of RBI is such that it is one of the most regulated part of our system, the financial system, because you must understand that India does not have full convertibility of foreign currency, right? So for every money which goes out of the country, there is an account which is used, right? So you are required to file a remittance form. You are also required to have TCS these days from the tax collection at source point of view. So there is very strict requirement in terms of money which goes out of the country. That is called the liberalized. While it is called liberalized, but it is basically putting condition to the remittance out of the country. Likewise, for remittance which is coming into the country, there are set of regulations which RBI has. One is the FDI, the foreign direct investment, right? So there are certain sectors which are not allowed to get FDI without the permission of RBI. Why this has been done? It has been done from the point of view of risk assessment. So the country has done a risk assessment. It has understood that certain sectors are highly prone or vulnerable from a money laundering, etc. It is also from the perspective of protection of the local business, right? We don't want to expose that business to foreign investors. So from those perspective, FDI has been regulated. It has been relaxed quite a bit in the last 2 decades or so, but it is still a regulated model where you are supposed to report every investment that you get into a company, right, from a foreign source to RBI. You are supposed to take a UIN number, a unique number for each of your investors, and you must report all of those transactions to RBI. Likewise, ECB, external commercial borrowing, which is in the form of a loan, is also a highly regulated sector and a system. So therefore, from an operational point of view, not much precaution is required, because you would know where you can source the money from, because every ECB goes through an approval process of RBI. RBI will not approve any money coming from a bank which is located in a high risk jurisdiction, right? So therefore, those checks and balances are already inbuilt. But any system can be prone to misuse. Therefore, you must know as a professional where the money is coming from, who is the beneficial owner of the lender, right? So beneficial owner under the PML rules and the PML Act is defined as any individual who is owning 10% control or 10% share, ultimate control on that particular company, right? If that person, if that ultimate beneficial owner, UBO as they call it, is in high risk or sanctioned countries or in one of those designated lists, then you must not execute that ECB transaction. As a professional, you must say that this is something that we must not do, right? So from that perspective, the only precaution that I would say from the regulatory point of view of PML rules is to know the beneficial owner and where he is coming from as far as the lender is concerned. Now, RBI operationally, RBI has also introduced certain restrictions on where the ECB should be used, right? I'm not getting into those aspects because those are not the remit of the PML rules. Those are the regulatory aspects as far as RBI is concerned. RBI would say that you shall not use this ECB for your day-to-day operations. You should only do it for capex. You must only do it for XYZ reasons, right? And you are supposed to provide quarterly reports to RBI as to where you have used that funds, right? So those regulatory mechanisms from a prudential point of view, as it is called, the prudential compliance with respect to ECB, you are required to follow. From a MLTF risk point of view, the thing that you have to keep in mind is the UBO, the ultimate beneficial owner of the borrower. If that person is from a high risk country or a high risk jurisdiction or a high risk customer, you must know that you must not execute the transaction, or if there is a suspicion, you must report to the institute will report it to FIA.
He's also asking, likewise, a non-profit in case FCR, what precautions should be taken?
Okay, so FCRA, the Foreign Contribution Regulation Act, requires every foreign contribution to come into an entity which is licensed or registered with FCRA, right? FCRA is a unit within Ministry of Home Affairs, and there's an online application which is permissible. So every whether it is NPO or not, right? They must take FCRA registration. And if there is an FCRA registration, there are various compliances that you're supposed to do, right? Quarterly, report filing, annual report filing. Then you must also keep record of those transactions and ensure that the end use of the foreign currency does not, deal with certain activities which put the country's security at risk, right? So from that point of view, you must know as a professional, if you are engaged with an NPO which is doing FCRA, you must ask, did you get FCRA registration? Is FCRA registration valid? You can go to the website and see whether FCRA registration is valid or whether there are any actions taken against that particular entity, right? If foreign contributions are received, you must ask them whether the compliances under FCRA has been done at the periodical intervals that is mandated under the law. What is the end use? Where is the contribution coming from? Again, the UBO will be very, very relevant in these contexts. You must know where the funds are coming from. Who is the ultimate beneficial owner of this particular contribution, and where is it going? Where is it being used? Which activities it is being used to fund? These three aspects you must know very, very carefully, and you must go through very, very carefully and ensure and satisfy yourself if you are involved as a professional with this kind of an entity and carrying out these transactions for that particular entity.
So I think we are done with this question answer part for the time being. I think participants have many questions. They will post it. So they will mail us the questions they have. So, sir, so I would now request our HOD and Secretary, BFSI Board, CMA Dibyendu Roy, sir, for his vote of thanks. Sir, please.
Thank you, Indrakshi.
Thank you, sir.
I think good evening to all of you. We are very much thankful to the gracious presence of Sri Balasubramanian sir, who is an IS officer, and in his busy schedule, he has taken some time in explaining exhaustively to our topic today. He is the Joint Secretary from the Department of Revenue, Ministry of Finance, and he has graced today's occasion as a chief guest on the topic of Prevention of Money Laundering Act organized by the Banking, Financial Services and Insurance Board. We are also thankful to his colleague Sri Avinash Rana for his nice presentation. We are also thankful for your detailed presentation, and we would be uploading it in our BFSI portal so that it would educate the persons who have not joined or maybe want to refer it back, because it is an exhaustive information laden presentation and it needs another round of revision. And I also thank our chairman, CMA Chittaranjan Chattopadhyay, who is always encouraging us to organize webinars and other relevant topics for the knowledge dissemination. We are also thankful to our President, CMA Ashwinji Dalwadi sir, and also our Vice President, CMA BB Nayak sir, for approving the conduct of webinars for the enhancement of knowledge of members and students. We are also thankful to our colleague, CMA Rajendra Bose, Director Discipline, and CMA Tarun Kumar, Additional Director, for connecting with Bala sir, for who has been our main chief guest and speaker. And we also thank our IT department, CEP department, for enabling us with the support for organizing this webinar. Finally, we thank our BFSI team comprising of Aditi, Shantanu, Indrakshi for their cohesive efforts. We also hope that this presentation will be uploaded along with the recording in our YouTube channel, which would benefit all stakeholders. Thank you. Over to you, Indrakshi.
Thank you so much, sir. So thank you to our speakers, the two eminent speakers,
Sir,
for their
before we
such exhaustive presentation.
conclude, sir,
Yes, sir.
I want
Yes,
to assure
Chairman.
you, sir, we shall be having a national risk assessment that seminar also will be doing it from the institute. We shall be doing it. I ensure
Please.
you,
And
we will do it, sir.
with that, with the NRA session, we will also do a more detailed presentation on the TFS part, the
Sure,
targeted
sir.
financial sanction.
Sir,
I will
be meeting you,
I'll
and
get
I'll be
please.
meeting you, and we shall be doing it centrally. And definitely, sir, I will be looking for your auspicious presence, sir, in that program. Thank you, sir. Okay,
Thank you so much. And I just wanted to mention this in the initial part itself. My apologies. I think once this webinar was scheduled earlier in the month of November, I couldn't come to that because we were very busy with the mutual evaluation on-site visit.
Yes, sir.
So I wanted to do this in the month of November itself, but we couldn't do this. But I thought better late than never. So we have started off with this. So we'll do more of these, so
Thank
that
you, sir.
we'll keep this issue alive, and until it reaches some level of maturity within the profession, we will
Sure, sir.
handhold you. And a
Sure, sir.
special
Thank you.
mention to Mr. Bose and Mr. Kumar, Tarun Kumar and
Yeah.
Mr. Bose. They've been very helpful, to the government, because this is India's evaluation, right? It's not my evaluation or Avinash's evaluation. It is India's evaluation. And the institute, as I thanked initially in my opening remarks, institute has partnered, very closely with the government. So I would request that contribution and participation to continue. We will reciprocate with hand holding from our side in terms of enhancing the standards within the profession. Thank you so
Thank you,
much.
sir. Thank you, sir. Thank you. We shall assure you, sir. We shall be doing it for best. Thank you.
Thank you, sir. So we are closing the program for today. Thank you so much.
Thank you, Abhinash ji. Thank you. Namaskar. Thank you.